Good morning, and I am happy to be here to kick off this event. I am not doing it in person this time as we are traveling, so I'm recording this the night before, but I think that this is going to be something that you enjoy. This is going to be a year of some news-driven stuff going on in the markets, and I know that that can give people a lot of sort of consternation about what to trade, how to trade it. The things I'm going to talk about, these two patterns, they're very, very simple, and they've been around since Julie and I started working with the markets, and before that, obviously. But we really put these things to work over the years, and I'm going to say they've been the consistent performers for the entire duration. So we started trading back in the mid 1990s. We were in graduate school, finishing up MBAs and PhDs out here in California. So we are in Los Angeles. We're Pacific Palisades, Malibu ways. We don't live in New York, although we spent a lot of time there. So we spent a lot of time at the New York Stock Exchange doing research, gathering data, figuring out how markets work, figuring out sort of a behavioral finance twist on how markets work. Back then, the entire driving force behind price was this specialist system, and the specialist system really dictated that since one person was responsible for all the price activity in a single stock, that you could get to know the personality of the stock and get to know the personality of the person trading it, and that you could use that information then to sort of handicap what's going on in the markets. Well, I built this big cyclical pattern project, and I called it a multivariate analysis of covariance in the United States equities markets. And that later became a book called Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, because obviously that's more approachable. A baseball analogy, a baseball metaphor, much more approachable than a big statistical analysis. But, over the years, it's all really come back to the psychology of trading and the number crunching. Now, obviously, with our backgrounds, one of the things that we've always enjoyed and the things that we've always liked to do is to publish about analytical research, right? Stuff that we're doing in the markets, and also to teach. We love teaching. So I've published a ton of things in magazines and journals over the years, all about the trading style that we've developed. We've also written books, and Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. That was the first book. There's 9 patterns on a daily chart in that book that have been sort of the cornerstone of everything that we've done ever since. There's some intraday patterns in there as well. But it was the thing that drove everything in our trading business. And that book's not in print right now. It'll be in print again next year. So in the new year, you'll be able to find that with a much bigger section on trader psychology, because I think trader psychology is the thing that is the most important focus that everybody can get on. So I can teach anybody how to trade. I can show you how to find the patterns. I can show you how to figure out what the market's doing. What I can't show you is how to conquer your own psychology. Top traders are made, not born. And that's the subject of our show, this Trader Nation that Julie and I do, where what we dive into is you have to figure out how to be able to exploit the resources that you have, the knowledge that you have, while tackling your own psychology and constantly learning and constantly just being inquisitive. We want to be inquisitive all the time. You want to be looking for answers. You want to be trying to figure things out. Those are the characteristics that we've seen that make for top traders, that make for people who really wind up doing well in the markets. We do a lot of this stuff. So we do a lot of teaching. We don't see a lot of people over the course of the year at the events that we do because we limit it to 20 people. So in spring, we do an event called the Income Trading Bootcamp Coaching Program and Mastermind Group. And, this is all about getting out there and knowing these people. So we speak a lot in public. We do a lot of television stuff. We do all that other stuff that gets us in front of people and we meet people. But then we wind up picking 20 people who we're going to work with, and we work with them at this live event. And it's fantastic. And really, once again, you look around these tables and what you see, the guy in the red shirt in the back, he's a food photographer. The guy next to him, he's a cop. The guy in front of him, he owns a limo company. There's a guy to his left who owned a chemical company. I can go right around that room, and between all the lawyers and engineers, there's lots of engineers. And everybody else who's there, what I can tell you for sure is the thing they all share in common is they bring their psychology to the table. And you need to be able to tackle that psychology. So I can teach all these guys how to trade. They've all learned how to trade. They're pretty much all professional traders. But the thing they had to overcome was a lot of the preconceptions they brought into trading with them. Just because you're successful doing something else doesn't mean you're going to come in and be successful, the very first day that you're trying to trade this stuff. It's got a learning curve. You're going to need good education. You need to learn from somebody who actually knows how to educate adults. And, by the time they come to this event, they've been through 40 hours of online training, a 650-page manual that goes along with the online training. And then they're doing 4 days of live training. We do it down in Miami Beach, Florida, because it's wonderful there and it's in the right time zone for people to really function. They don't like to come out here to California and get up at 5 in the morning to go to a seminar. But it's hands-on. So what we do is we go around and we work with these guys as they're working at their computers. They bring the computers, they're trading there. And we're sort of kicking the tires and working the bugs out of the system. And that's what you're going to have to do as you're trading on your own as well. Now, I think you'd probably agree with me in saying that you can break down what your edge is going to be in getting your trades out there confidently every day by just breaking it into 3 things. You need to have good strategy, you have to have good tactics, and you have to have the discipline. So you're going to go through, you're going to apply a strategy to the markets, you test the strategy, you figure out what that strategy performs like over time, you see it in action, you see that it works. Then you say, okay, well, how am I going to go and implement this? I'm going to use bracket orders, I'm going to use conditional orders, I'm going to use automation to handle the trades. And then you have to wrap your head around, how am I going to be disciplined enough to actually do this every day and to have the follow through? If I had a bad day yesterday, am I going to be able to come in tomorrow and load those trades up the way that I'm supposed to? If I had a great day yesterday, am I going to load them up the way that I was supposed to? There's all sorts of things, right? When it's good, it's bad. When it's bad, it's bad. There's all sorts of things that can get into your head and into your psychology. The important thing is that you get in front of the opportunities and that you're able to execute them flawlessly. We divide our day into workflow. And the reason we do this is this helps with the flawless execution. So we know exactly what we're supposed to be doing each chunk of the trading day. We know what we're doing in the pre-market. We know what we're doing at the opening bell. We know exactly what we're doing at the 5-minute mark. And we know exactly what we're doing after the first hour is over. And by segmenting things like this, it makes it much more like a job, and it gets you into the discipline of here's what I'm supposed to be doing. It gives you accountability to yourself, and that accountability is going to go a long way in making you successful. Today, we're going to focus on some of these around the horn trades, the NYSE trades in particular, that we actually place before the opening bell for automated execution over the course of the session. So these couple trades that I'm going to show you, and today I'm going to use Metastock as the charting platform because I want to go back and just drill down to a bare bones price and time analysis of how we're doing this. And also let you know that, Metastock has a plugin that'll go through and scan for the patterns that I'm showing you. It'll scan for all my patterns, but it's a nice way to go and stick your toe in the water and figure out, if I run down all these patterns every day and I look at them, am I able to make sense out of how they should be traded or how to set them up? We're going to go through all that here in a minute. And I think that by the end of the presentation, you can have a pretty good feel for some simple trading strategies that can put you in front of the opportunity for profit. How much profit, you say? We're going to focus on 2 patterns, and one's called fastball and the other one's called infield fly. So for those of you who are overseas, if you've read my book, Beat the Street, in Beat the Street, it's called an expansion of range and volume. That's fastball. And infield fly is called an extension reversal because that's what those 2 chart patterns really refer to. If you look at this table, what you can see is they have been in 2024 just runaways again. This is year over year. They really perform better than just about any of the other cycle patterns in the book. But this is the first time that they're so just widely outperforming everything else. and for the most part, doing it on the short side of the market. This spreadsheet here shows you the pattern distribution, the triggered pattern distribution. The whole purpose of those pies up there is to just give me a visual way of making sure I'm not introducing selection bias into what I'm doing. But the bottom line is, for the year, the around the horn trading plan on a $100,000 account levered 4-to-1 has returned $109,745. That's if you took every trade. That's if every trade went exactly by the rules. You didn't slip. You didn't do anything wrong. But the thing to focus on there is, number one, it's a job. So you expect to make money when you're working. This is not investing. This is not putting your money in the market and just leaving there. This is, you're working that machine and you're setting up these trades. And you're also spending time in the evening finding the trades to set up and put in the next day. So it's not as eye-popping as you might think it is. I'd never think those numbers that anybody puts out there are all that magnificent, when I consider that it's a job. But take a look here at the fact that out of 50 points, almost 51 points of total profit, so 51 points per share traded, whether it's levered or unlevered, we've got 37 points that came from fastball and infield fly alone. So a big chunk of the return this year has been due to these two patterns. So I think it's worth digging into them. And what I'm going to pull out today is just the patterns that have triggered so far this month. We can see we've got a couple of fastball patterns and a couple of infield flies that's set up and triggered. So let's go and take a look at how we set them up and what each one of them does, and where the profit potential is. Let's start with fastball. Again, I said this is an expansion of range and volume, and the guidelines for the pattern are really pretty simple. We want to see a breakout from a pullback or from a consolidation, so there's two different types of fastball setup. We want to see the widest range of the last 2 weeks of trading, so the widest range of the past 10 trading sessions. We definitely want to see it happen on greater than average volume. So on that fastball day, we want to see really good volume because that indicates institutions are the ones who are pushing price. And from the daily chart where the setup happens, we want to go and enter tomorrow 10 cents beyond the extreme of today's bar. So for a long, we're going to go 10 cents above the high, and for a short, we're going to go 10 cents below the low. Here's what the pullback looks like. On this daily chart, you see prices trending higher, then it pulls back, and then we have the widest range of the past 10 sessions. It breaks out above that pullback, and what we're going to do is enter the following day 10 cents above the high of that bar. Same thing for a move lower. Stock is trending lower, gets a nice little switch back higher, you get a pullback, and then we've got an expansion of range, expansion of volume, and we're going to go short, in this case, 10 cents below the low of the bar that created the pattern. For the consolidation setups, we can go either way. We can go long or short, against the trend, with the trend. The consolidation is what's going to determine where we're going. In this case, price is trending higher, moves into a sideways consolidation, resumes the trend move higher with an expansion of range, expansion of volume, fastball setup. We're going to go long the next day, 10 cents above the high of the bar that created the pattern. In a reversal, stock's trending higher, consolidates sideways. In this case, it breaks out lower. So now we've got a fastball move. We're going to get short 10 cents below the low of the bar that creates it the next day. Trend following on the short side. Consolidation period, fastball bar, 10 cents below the low, we're going to go short. Trend reversal, market's moving down, go sideways. Daily bar creates that fastball move. The next day we're going to go long, 10 cents above the high of the bar. Here's an example in General Mills. It's an actual trade that was taken this week, and you can see it here. We've got a daily chart. The last bar on the chart is that fastball setup. You can see that big expansion of range move comes down out of the consolidation. The first thing that we do is zero in on the intraday chart, the 5-minute chart, because that's where we're going to look to set our stops. So I always set my stops in the same time frame that I'm going to be trading. So in this case, I'm looking at this intraday 5-minute chart. It's got a very persistent downtrend. The whole session's moving lower. It's going into the close at the bottom of the trading range. And I see that if I violate this level right here and I start moving higher, I'm going to wind up way back up in the trading range somewhere. It's got dollars to move above that line. And that's not something I want to be a part of, because to me, what the price action represents is institutional order flow. And as I'm reading institutional order flow and I'm looking at this chart, what I see is that if I get up above that line, the institution is probably done. They have finished selling. They're not selling anymore. And as price starts moving up, there's nothing that's going to be pushing it down. I don't want to amplify the potential loss on the short sale. So I'm going to get out right there. Then I bump it back down to the daily chart, and I say, where can I find support on a daily chart below the entry price? And I look back and I can see here in June of 2024 and in March of 2024, this baby made some inflections right on that line and then tracked higher immediately. So that tells me there was order flow sitting there. There's orders sitting there, probably still waiting to be filled. There's a buyer down below the market. And what I'm going to do is I'm going to set my exit price right in front of that anticipated order flow so that when it gets there, I'm taken out of the market at a profit. The next thing I do is take all that information and I create a trading plan. In my trading plan, specificity is everything. So I want to use gout sheets. I want to use a master roadmap for the next day so that I can automate this stuff. So here I've got General Mills. I know it's a fastball setup. That means it's an expansion of range, an expansion of volume. I'm going to go short. I already know in my mind that's 10 cents below the low of the previous trading day. I don't have to look back to get the rationale. I know what my rules are. My entry is $65.76. My stop, which comes from the intraday 5-minute chart, $66.17. If it gets above that, then I think the institution's no longer selling. I've got a target where I think there's going to be buying pressure. That's down at $65.16. And my ratio on the trade is 1.46 to 1. I stand to make $1.46 for every dollar that I stand to lose. If I get 50% of the distance to my profit objective, I'm going to take that 66.17 stop and I'm going to move it to 65.76. We're going to move the stop to break even. The trade becomes risk-free. These guys over here, the floor trader pivots, those represent levels that I'm anticipating inflections at. That's a different seminar. That's a different discussion. But just know that if you're looking at my trading plans, those numbers are there. They're there for a reason. I've got lots and lots of recorded sessions out there that you can watch on how I use floor trader pivots. And if you have questions about it, just shoot me an email, adrian@traderinsight.com. How's this one go and play out? Well, here's your intraday 5-minute chart. You can see we didn't get triggered into this trade until about 10:35 in the morning. There's a 5-minute intraday chart of the trading day. You can also see that up there above the stop loss line is going to be the next pattern that we talk about. That's an infield fly, that long tail above the current trading range. That's just a spoiler alert. But over the course of the day, this thing just goes down, doesn't violate any of our rules, never does anything wrong, triggers the entry price, and makes a move straight down to the profit target. You're in the trade for hours. You don't have to manage it because it's automated, so you're free to go do other things while the trade's going on. Let's bump back out to the daily chart and take a look at where we wound up on this one. You can see that that price level that we established as a target pretty much stopped everything right in its tracks. That support that we saw there was enough to bring the momentum to a halt. Let's look at another one. This is ResMed Incorporated, and this is going to be the pullback variation of this. So you can see we had a trending move higher. Stock was moving up, moving up, moving up. Then we had a pullback, and then we had that fastball expansion of range, expansion of volume. The thing started taking off to the downside, and we've got a setup. So the first thing that we do after we run our scanner, we dig into the chart and say, all right, where was the price action going out over the course of the day? So this thing sank steadily, based going into the close, and then sold off into the close. In this case, I'm going to put my stop right above that sell-off, because if it gets above that stop level, again, I assume that that means we're going to start ticking back into the range. This is a $235 stock. By the time I get above that stop level, I'm at 236. If I set it any higher, I'm up around 238, and it's going to be taken off into the 240s before you know it. Pressure was persistent. Pressure continued into the close. Back out on the daily chart, we see the first place that it's going to land looks not that far away from where we're going to enter. That's where I want to put my first profit objective. I see that there are other places below here that make for a logical extension move. If I'm trading it manually, I can go and look at that over the course of the session, but the safe bet, if I'm automating, is to go with the first place that price is going to inflect. So now I put together my trading plan. I've got RMD. I know it's a fastball setup. It's going to be a short. The entry in this case was 235.26, so that's 10 cents below the low of yesterday's trading. 236.20 is my stop loss. That's from the 5-minute chart. That's where I think this thing's going to, if it reverses, it's just going to keep going higher. And my initial target on it is $233.96. So 3.96 going to be my target. I've got a ratio of $1.38 to be earned for every dollar I stand to lose. And if price gets to 234.61, I'm going to move my stop to break even. If price gets 10 cents to the target, I'm going to move my stop to that 50% level. And when I hit the target, I'm going to take it out at the target. Again, I've got my pivot lines here. I know where I'm looking for inflections. If price were to travel higher before it went lower, I'd be looking at that 239.51 level as a possible place for an early entry. But again, as I said, that's another conversation. So what did it do? Here it is. It triggered in the second bar of the trading day, and it went straight down to the profit objective. And over the course of the day, it did extend. So there's a lot of coulda, woulda, shoulda that goes on with this stuff, a lot of sour grapes. This is why I said everybody always feels like they're wrong. When you're right, you're wrong. When you're wrong, you're wrong. It's not about being wrong. It's about following your plan. I followed my trading plan, and by following the plan, I know that I got in front of the opportunity and that I took the profit. On the daily chart, what we see is that profit objective at that next level of support and resistance that we talked about. It did hit there. It hit exactly there. And that shows you that if you're looking for order flow, if you're looking for where the resting orders may be, you've got the opportunity always to have very good projections for where you think price is going to land. Now let's talk about infield fly. These are extension reversals, and it's one of my favorite trading patterns. When this thing comes up, I am on it, whether it's daily or intraday or in swing trading moves or whatever it is, I'm looking at it. The infield fly setup is really, really easy to spot. So we get a move on a daily chart, usually culminating in a gap higher. So we're looking for it to gap up. Not necessarily the case that it has to gap up. You can do these more in the spirit of this infield fly thing. I'll show you why in a minute. But what we want to know is that it closes down in the bottom of the range and that open is not way up in the top of the bar. So ideally, we want to see that there's room for a profit between the low and the gap day high or the gap day close, the previous day. But the pattern works really well even if there isn't. So we want to see the same kind of a thing. In this case, it's a short only pattern. We want to see it go 10 cents below the low of the bar that set it up to trigger an entry. Here's what it looks like. There's an idealized chart again. So these are daily bars, stocks tracking higher. You can see up at the top there that reversal is in. We've got an extension. We've got an extension reversal. It tried to go higher. It couldn't. It closed down in the bottom of the bar. The next day, after that trading day is done, we're going to go short 10 cents below the low of the infield fly bar. Here's an example in Toll Brothers. Toll Brothers making a move higher. And, when it gets up there, it gaps higher, it opens, it tries to trade up into prior resistance, and then it goes down and closes in the bottom of the bar. When we drill down into the intraday 5-minute chart, what we see is a real good place to say, if price gets above here, we're going to assume it's going to try to move higher. Arguably, you could put a little bit higher. You could put it above the highs around 14.10 there. But for me, I put it right above the high of that range going into the close. The target here is relatively easy to identify. We've got some support on our daily chart from the middle of October. We've got some overhead resistance from the end of September. I've got a logical place to draw a support line and say that's where I think price is going. And I start to put together my trading plan. And here we see I've got an infield fly short setup. It means I'm going to go short below the low of the prior day. 10 cents below that low means 156.89 is where my short sale is going to be triggered. So it would be set up as sell short, stop limit, 156.89 stop, 156.80 limit. So the stop price is the price that I want. The limit price is the worst price I'm willing to accept. And then I've got a stop loss at 157.73, an initial target, 155.34. I stand to make $1.85 for every dollar that I stand to lose. And when I get to 156.12, I'm going to move my stop to break even. When I get 10 cents to my target, so when I get to 155.44, I'm going to go and I'm going to move my stop to the 50% level. And when I hit the target, I'm going to take the trade off at the target price. Got my support and resistance lines again, and I am off to the races. And look what happens. We get triggered into the trade on the third bar of the day, and by 10 a.m. Eastern, we are down at the profit objective, and the stock just keeps right on going. Again, from the trader psychology vantage point, coulda, woulda, shoulda, nope. This is about plan the trade the plan, go to work, and get your money. Here's where it wound up. You can see once again, it went down into that next level of significant support and resistance. It's what you would expect if you were sitting in front of the terminal looking at it. But the safest thing to plan for, especially when you're automating the trade, is the closest area of support and resistance. That's the most likely place that you're going to inflect. That's the most likely place that you're going to pick up a target. Here's Block Incorporated. There's another one. We've got an infield fly set up on the daily chart. You can see there this one didn't gap up. What I like about this one, though, is the long tail that was left. So it opened, it traded way up into $90, and then it came way back down and closed in the bottom of the bar at $85.82. That's a good-looking setup to me. It's in the spirit of an infield fly, definitely. And what it's got going for it is that extreme travel range that says, yesterday was a wide range bar. The day before was a wide range bar. The day before that wide range. The day before that wide range. There's a lot of momentum there to unwind. So we go down into the 5-minute intraday chart. We see that we've got a real clear place above that closing range to put our stop loss. And then go back out to the daily chart and drag across to March of 2024. You can see the support and resistance levels there. You can see that close on the bar 2 days ago. In November, and everything here says that's a good place to put an initial profit objective. So when I put my plan together, I've got an infield fly short, and I am going to get in $85.15. My stop from the intraday chart is going to be $86.40. My initial target, $83.38. And again, I've got a ratio on the trade that's right side up. $1.42 to be earned for every dollar I stand to lose, and 50% of the distance to the target when the trade becomes risk-free is $84.27. And keep an eye on the pivots, kind of a wide range move, but if we get up from the open and get into 87.02, we're really kind of close enough to our stop level there that we can say there was a lot of resistance up around there, so maybe a trade from 87.02 down to 86.40 would be in the works. But as I said, that's an advanced strategy, and we will talk about that in another seminar. Taking a look at how this played out, here's your intraday chart, and you can see never even thought about getting up to that stop. It opened, it triggered, and by 9:45, 9:50, you were out of the trade at the profit objective, and that's pretty much the most you were going to get out of this thing over the course of the entire session. So when you look at this, we landed exactly at our profit objective. Stock didn't go a penny further, and all of those plans, you should know, are published the night before the trading day, and everything is available all the way back to 2006 on Trader Insights. We've got the archives of every single plan, of every single gouge sheet, of every single spreadsheet showing you how these things turned out, and everything is published the night before for the next trading day, so there's no hocus pocus, there's no mumbo jumbo, there is no maximum favorable excursion. It's just, did it hit the entry, did it hit the target, or did it hit the stop? Those are the ins, the outs of the trades, and the money management rules. And it's a very, very mechanical You engineers always love it because it's something that you go through, you can quantify, and you can very much see how these things are able to just automate and work for you over the course of the session. It's something you can do on your own. You can go look for these patterns, you can put it together, you can trade them every day. I think they've been just the workhorses of our algo stuff, of our automation, and I hope that you're going to be able to use them too. So if you're having a hard time getting consistent results and you want to take a look at what we're doing, go to TraderInsight.com/trade. And the solution is just a couple clicks away here. You can join us live in the war room. I will also give you all of the trading plans. I do 3 different trading plans every day for the guys. So the war room is really filled with a bunch of alumni from the boot camp and some people who are trying to figure things out as well. But you'll have the trading plans on your desk. You've got the war room open to talk to us during the day. We're going through those trades. We're also going through the volatility band trades. It's a great community, and everybody in there is a professional trader. Everybody in there is earning their keep by trading the markets each and every day. Okay, so if you have questions, shoot me an email, adrian@TraderInsight.com. I wish I could have been here live with you folks, but as I said, we are traveling. I'll see you live the next time. Have a great trading day. And as always, thanks to David for setting this up.